Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So you can see market has made another attempt to go higher in recent session, although we were correct on a possible destination point, since we know that the 107.55 approximately 107.60 is the weekly resistance level, and we said if you take the long position, be aware of this resistance and you could use it as a target of the possible upward direction if you're trading on a daily and intraday charts. But unfortunately we haven't got the retracement here that we were counting on, so hoping that probably it could let us to take the position, because right in the beginning of the session it was not attractive risk reward ratio for position taking, because stop should be too far to make it attractive for taking the long position. So currently market stands near the same resistance level. Here, guys, we do not have good extensions to set the new target, because all extensions based on these ABCDs that we talked previously already has been completed. This market has stand above the XOP. Using of this new extension ABC bottom probably reasonable, but it has target around 110 area, so it is too far, I mean, at least in terms of the OP target, while the COP target already has been passed. So from that standpoint we use a slightly different approach. So we try to use the extensions of the retracement to estimate the short-term standing resistance level. So first of all, based on this retracement, we could set that spot might be around 108.05 approximately, is the nearest destination point that market could reach, and next one will be around 108.93. so right there. So these two possible destination points to the upside. In general, probably you know that recent actions coming due massive review of the market sentiment in terms concerning the Fed comment policy. So for instance, based on the Fed fund futures rate, chances on 0.5% change has dropped from the 50% to the 25%. So investors right now do not expect that in February Fed will change rate for 0.5% right now. And that really supports the idea of the possible dollar weakness and pushing the other currencies higher. At the same time, we do not see really agreement among the different currencies in the performance, which makes the overall background a bit fragile. So if you take a look, for instance, on the Great British Pound, you could see that market hasn't created the new top here. Right, you could see that trend turns bullish. On the weekly chart, trend is bullish as well, so maybe market will proceed higher, but we here see definitely the divergence between the performance of the Great British Pound and between the performance of the Euro and Dollar Index that created the new top. So in particular speaking, if you take a look at the Dollar Index, here is the drop that we've got based on the same reversal session on the Dollar Index, so it stands at the new lows, while on the Great British Pound you do not see it. The same story you could find on Australian dollar, New Zealand dollar. Also, if you take a look at the Japanese yen, it is not definitely yet, but take a look about the pattern that we were considering. We said that market has to give us signs that it's breaking the channel and the price pattern inside of this channel when it's retesting the lows and then shows 1618 extension. Here's market has not completed 1618 extension, return rate back up. Actually this should be correct, a bit trend line. Return back up, retesting this area, and take a look potentially based on the performance here. Theoretically, it might be starting of the hand and shoulders pattern. If this will be confirmed, it once again suggests the strength in the dollar, and Japanese yen is breaking this pattern. Actually, this already gives some signs that something start moving differently, but it's just mostly like the hints. What I would like to say is that current upward direction, current rally, it is not looking superb. It's really it's strong. It's has some fragile background, and it could mean that it could not last too long. So besides, we're gradually coming to CPI report later in this week, on Thursday in particular, and that could change everything actually. So let's keep watching. Let's stand focused on the nearest targets that we have, but to not overestimate the ability of the euro currency to move significantly higher. So it would be better to focus currently on the nearest standing targets. On the 4-hour time frame chart, it's not much to say, because as on the hourly chart, as on the 4-hour time frame chart, we do not have a lot of things to discuss. Here actually market is forming some kind of the widening consolidation, and if we will get some pullback here inside of it, it might be considered position taking, probably for a possible upward continuation here. If we will get some patterns, for example, it might be on some reverse head and shoulders on top. So it might be left shoulder, head, right shoulder might be formed here, for example, because here is, as you can see, relatively strong thrusting action, and just as that market will try to proceed higher, relatively good. And from that standpoint, we could keep an eye on this possible pattern. If market will show the pullback to the 106 area somewhere, well, we will consider possible taking of the long position if it will be reasonable at that moment. But at this point, when market stands right at the weekly resistance and around the top, well, personally, I feel uncomfortable taking the position immediately. I would prefer to wait for a pullback at least and focus on the nearest standing target that we have mentioned. So I'm still have some doubts on the really on the perspective of this rally. So somehow I suggest that hardly it will be really strong and long term. It's probably some tricky games around the release of the important data, because well, based on the performance, it seems that markets totally ignores the Fed sentiment and Fed comments. Why this is happening, it's difficult to say. Either they, as I said in a telegram, it's maybe Fed is losing the confidence of the investors, or maybe markets do know something that Fed maybe has no ability to fulfill their promises. We also talked about in the weekly report about this. The Fed indeed has limited reserves, limited margin of safety to complete the steps that they intend to do. But still, we think that until the spring, maybe April, May, it should be enough reserves to keep the same strategies that Fed is now following. So we will see.